Good morning, students. From today, in our accountancy subject, we will start with the chapter number 3 of part 2, that is provisions and reserves. Friends, we very well know this. In accounting, concepts, principles, and conventions are followed while recording the business transactions. So these two topics, provisions and reserves, are very important and are based on two concepts, that is going concern and prudence. Friends, going concern, the assumption for the going concern concept is that the existence of firm will continue for a considerable long period and the firm will not dissolve within near future. That means this concept suggests that firms will continue for a long period. So it becomes necessary to keep it financially sound. To keep the firm financially sound means is good for that purpose, as the firm is going to be continue for a long time, and that is why every year out of the profit some amount is transferred to reserve. Moreover, prudence concept, or you may say principle of prudence, this principle says that a part of business profit should be kept aside and transferred to provision in advance to protect the business from future probable expenses or losses. Right? From because of our present transactions or present activities of business, there may be a liability in future. There can be a liability which we will have to pay, or there may be future expenses we will have to pay. So it is better to be ready for the same, and out of the profit of the firm every year some amount is transferred. This is called provision. Say for example, bad debts, provision for bad debts, which is known as bad debts reserve. Bad debts reserve is a provision. Why it is made? Bad debts reserve is made to face future probable bad debts. Now in future there may be a bad debts, might be that amount belongs to current year. In current year, to those customers to whom you are selling your goods on credit, it may be possible that any or few of those customers are not paying the amount, and it comes to know in the next year. So though these are the transaction of current year, its effect will be in next year. So to face such kind of things, such kind of transactions, every year some amount is transferred to the provision. Okay, so today our topic will be provisions and reserve. In that, today we will be learning about the meaning, characteristics, and importance of provision. Certain accounting concept, principles, and conventions are followed while recording business transaction in the books of account, and preparing final accounts. Going concern, as I said, is a basic assumption among these accounting concept, principle and conventions. As per this assumption, it is assumed that existence of firm will continue for a considerable long period and the firm will not to be dissolved within near future, or business transaction will not be curtailed considerably. To continue the existence of the firm, it is quite essential that financial position of the firm must be very sound. For this purpose, some amount from the profit is appropriated and transferred to reserve so that the firm can exist even in adverse situation and can grow also. To fulfill this object, the principle of prudence is also followed in account. As per this principle, a part of profit of business is kept aside and transferred to provision in advance to protect the business from future probable expense or losses. So, as I said, to face future probable expenses or losses, or you may say to protect business from future probable expenses or losses. Thus, reserves and provision enhance the long term financial soundness of business and protect the business against contingencies. In this chapter, we will study reserves and provisions in detail. Meaning of provisions, characteristics, and importance. Topic for today: meaning of provision. Provision means an amount appropriated from profit to honor probable liability which can be identified but the amount of which cannot be ascertained accurately. So, provision is what? It is an appropriated amount from profit to honor probable liability which can be identified but the amount of which cannot be ascertained accurately. So, friend, two things are important. One thing, that amount appropriated from profit, and second, for the liability whose amount cannot be identified. Liability can be identified but amount cannot be certainly accurately ascertained. Okay, for example, provision for depreciation, provision for bad debts, provision for repairs and renewals, provision for taxation, provident fund, pension fund, worker sharing fund, provisions for voluntary retirement scheme, etc. Friends, these are the things where we are knowing that there may be a liability or expense or any kind of loss in future, but amount is not certain. Say for example, we know that there may be a bad debts in next year or next upcoming years, but how much we are not aware of. The we know that there might be a need of repairing expense or renewal expense, but how much we don't know, right? That we will come to know when it actually occurs, right? The same way, taxation depends on the profit earned, right? So everything is uncertain, it is for future. Provident fund, pension fund, workers profit sharing fund, all depends on the job done by the workers throughout his life in with our premises, means with our firm, right? So in provision, liability can be identified but amount cannot be ascertained accurately. Thus, provision is different from liability. Amount of liability is fixed and it is sure to pay, while the provision is an amount appropriated from profit, probable expenses or loss, for which the amount cannot be ascertained accurately. Let us see what accounting entry is passed for the provision. As it is said that provisions are a part of profit, so they are created from profit and loss account, right? So the entry for provisions is profit and loss account debit to bad debts reserved to depreciation, that is provision for depreciation, to provision for taxation, provision for repairs and renewals, provisions for provident fund, provision for pension fund, etc. Okay friends, so simple provisions are created out of profit and loss account. Okay, let us talk about characteristics of provisions. Characteristics of provisions are as under: provision is an amount appropriated from profit or income from for a specific purpose. Yes, it is. Then provision is an amount appropriated from profit for probable expenses or losses or liabilities for which the amount cannot be determined accurately. That is also there. And third, provision is appropriated out of profit and loss account. We have seen while discussing about this, nothing new to talk about. Let us talk about the importance of provision. Provision is made for probable expense, loss and liability of respective year, and therefore it is appropriated out of the revenue of the same year, and hence true profit or loss of the business can be ascertained. So friends, though provisions are made for future, but they are made out of the revenue of the same year. So that provision will maybe means it can be a liability in future, right? But to face that, we make ourselves ready and we appropriate amount from current year, so that profit or loss of business for that particular year in which the requirement of amount is there will not be affected. Second, provision is made to prevent impact of transaction made during the year on the financial performance in future. That is there. Provision is made to prevent impact of transaction made during the year. Whatever transaction we are doing today, its effect may be there in the financial position of company or firm in future, but to face them we are making provision right now, so it will not be affected in future. Financial position or financial performance of a company in future will not be affected. Third, known liability of future can be spread evenly over certain years by making provision. This is there. We have seen that provisions in provisions normally we are not knowing the exact amount, but we are knowing the liability. So if there is any known liability, then that can be spread evenly over certain years by making provisions, right? So suppose you need to purchase a asset or you need to replace an asset after few years, so for those many years you have time to spread evenly some amount or appropriate some amount for the same from this year, current year itself, so that after completion of that period you will be having that much of amount, right? Here they are talking about some liabilities. So if you are having some known liability to be payable after few years, then that future liability can be spread evenly over those few years by making provisions, so that financial position of that particular year will not be affected in which the liability is going to be paid. Assumption of going concern and principle of prudence can be followed by making provisions. So yes, it is there while discussing. At the time of starting, we have discussed about this, that going concern and prudence are followed by making provisions. What else? If provision is not made against decrease in the value of asset in future, the capital of business may be wiped off. Such risk can be avoided by making provisions. So friends, in future always it is there, as our firm will continue for a long time, we will need to replace few assets, right, after some time. So if we are not making provision, then we will have to replace those assets from the capital, and if capital will get affected, certainly your profit is going to be affected. So if provisions are made, then capital of business is not affected in future for buying the assets or for replacing the assets. What else? Required fund can be managed by making provision of a certain amount every year out of the profit. On the expiry of the useful life of an asset, the managed fund can be used to purchase new asset. This is the same one, right? That required fund can be managed by making provision. You need a fund after few years, so from current year only you may spread it evenly, and you can create that fund after those many years, and that can be useful for you. So friend, this was all about provisions, its characteristics and importance. Next lecture we will be talking about reserves, its characteristics and importance. Thank you.